Welcome back to the show. We like variety on the show, and that's what you're getting with us. Charlie Burton, the founder of Easy Trader. Morning to you, Charlie.
Morning.
I've just noticed the FTSE's rallied 150 points off its morning's lows at 4 in the morning or whatever it was when my spread betting firm basically opened the prices. I'm pleased I'm not trading these markets. Are you?
Yeah, me too. We were just talking off air. The euro dollar last week, gap down, had a huge gap down, must have stopped out a load of traders who were long.
And they've rallied 300 pips.
Exactly. How can you actually trade that? And I know a load of bank traders who were all caught on the short side, got excited when they saw the big gap, only to then see it, like you say, rally 300 pips against them. It is very tough out there to trade.
Yeah, agreed.
Yeah.
Okay, will you send me an interesting paragraph? Okay, topic for Monday, the forgotten trade most traders neglect. Looking forward to hearing that. Plus pain avoidance and the mistakes traders make in order to do this.
Yeah, well, I think very appropriate for these markets, actually, the forgotten trade that most people forget. People spend a lot of their time thinking about what trades they want to be in. Euro dollar, trying to figure out which way it's going to go, which way is the FTSE going to go on the back of all this news. And yet, there's nothing wrong with being in cash. Cash is a trade, and I always say that to all of our traders, that you don't have to be in a trade all day long or every week. Being in cash is a position. And I always say, look, what would you rather at the end of the day? Would you rather have a flat P&L, or would you rather have a negative P&L because you decided to take a trade because you just were itching to get into the market, but then all that happens is at the end of the day or at the end of the week, you're down for the week when you didn't need to be. And in these markets, there's nothing wrong with being in cash. And it's similar actually last year, the Forex markets, they had historical lows in volatility, if you remember last summer. I hardly traded over the summer, but you have to have that strength of will, that discipline to be able to take a step back and say, do you know what, these markets, I just can't read them at the moment. Like you say, the FTSE big turnaround this morning, sometimes it's very difficult to read. Just take a step back until they come back to you, because they always do. They'll always come back to you, and whatever your style of trading may be, whether you're a trend-based trader, you're a counter, whatever it might be, the patterns will come back for you, but just take a step back when they're not quite doing what you want them to.
Okay, so the important, well, I remember reading Steve Nielsen's Japanese candlestick book, and there was a quote the Japanese say, there's a time to buy, times to sell, and there's a time basically to do nothing. And that's what we're saying here.
Yeah.
You don't always have to have a position, do you?
No, you don't. And actually, like I said, that sometimes you can look back at the end of the day and all of a sudden you just lost £1,000 and think, oh God, if I hadn't have taken that trade, I wouldn't be down £1,000 right now, or at the end of the week or whatever. So yeah, being in cash is a position, but too many traders forget that, and they always want the fix. They want that buzz of being in something, when in actual fact, the weather's nice, go out and watch Wimbledon.
Okay, so that's interesting. Pain avoidance and the mistakes traders make in order to do this.
Oh, I had it was a great email came in last week from a trader, and what most traders are trying to do all the time is avoid losses. And so they try and avoid pain. And the market, always say, is a great tutor of teaching traders bad mistakes. So you imagine you've got a trader, they're in a trade, they have a stop loss and they're nicely disciplined, they get stopped out, and they take another trade on another day and they have another stop out. At the back of their mind, they're thinking, my stops are too tight, I'm going to start widening them. So they start to widen the stop. So that then affects their risk to reward. So the risk to reward comes out of kilter, but they're doing everything they can to avoid having that stop out. And maybe on a couple of those trades, they work out as a result, but they have a big inverted risk to reward, which ultimately isn't going to make them any money. And then they still have a stop out, even with their wider stops. So they say, I know what I'm going to do. I won't use a stop this time, because it always comes back, doesn't it? That's what they always think. It always comes back. Trader last week thought exactly that, got into, I think it was like a pound Aussie trade or something like that. It was a day trade. They were in it. All of a sudden it started moving against him. So he thought, okay, it'll come back, so I'll sit in it. Before he knew it, as a day trader, he was down 100 pips in a blink of an eye, which in percentage terms, if you're a day trader, can end up being quite a lot.
Yep.
He sat on it, and he sent this confession, and he said, ultimately it came back for me and I got out at break even. But my concern is, well, what happens if it had gone down 150 pips, 200 pips, and it just carried on and it never came back?
Basically, intraday go down 100 to bring it back to zero and say, wow, that's bad trading, isn't it?
It's awful trading, yeah. But this is the sort of thing that happens with traders. So they do everything they can to avoid the pain of loss. But what they have to do in order to overcome that is just accept. You have to accept that you're going to be wrong a certain percentage of the time. 50% of the time, if you're a trader, might be that you're going to be wrong. Forget trying to have 90% success rate strategies. Just go for something a lot more standardised and get your risk reward right, and that will make up for those losses that you have. Keep your losses low. I know it's an old cliche, but it does work. But so many traders get caught up in it, and before they know it, they're not using stop losses. And I'm the one who gets the emails come through from traders saying, "Oh look, I've got to tell you about this story that's happened to me." I had a trader recently who remortgaged because he remortgaged his house to fund his account because of the situation he got himself into. And then they're asking you for advice on how am I going to get myself out of this because he lost a lot.
Right.
So it's always a painful thing to see.
Well, I think on that, okay, one of my friends fairly recently confessed that he met a margin call on a credit card, and straight away it's like, I don't think you should be doing that. I was always taught, be really, really happy to take small losses.
Yeah.
Okay, and again, the Japanese would say basically, be prepared to lose a hook and a number of hooks because one day you'll catch the giant salmon.
Yeah, exactly. But trying to educate people into that, because they forget, we all as human beings forget those big trades will come along, but we have to wait for them. And so what we do remember is all that pain that we take. But it all comes back to building experience and building that discipline, which a lot of traders do lack, as we know. Right back from being on the floor, a lot of traders lack discipline there, right to the current age where you've got all the traders trading electronically. And when you're sat in a room on your own, maybe a home office or wherever it might be, and you haven't got someone looking over your shoulder telling you, "Oh, hold on a second, you shouldn't be doing this." All of a sudden you're gambling.
Okay, so just to wrap up, okay, what tip would you give to the Tip TV audience today, given the volatility in these markets? Really, just...
Right, like I think I've already said, we're in the summer. I always scale back in the summer anyway. The markets there's less liquidity in the summer anyway, less volume coming through in the main.
Seats on the train.
Yeah, exactly. Yes, okay. And but yeah, scale back your trading. Enjoy the summer. The markets will be ripe again in September. I know there's a lot of news out there, but it's a lot of volatility. It's not always easy to read. And actually, just say, okay, if you want to trade, scale back your position sizing a little bit, because the markets can be so volatile. Even when you think you've got it right, all of a sudden it turns on a dime and comes against you. A bit like that FTSE this morning or the euro dollar overnight. So scale it back, enjoy the summer, the tennis is on, and there's other sports to watch as well, and enjoy that.
Okay, Charlie Burton, I'm going to make an offer. If you've got one of your clients, a trader who's done a really good trade or a really bad trade, he's prepared to come on to be interviewed by you.
I will do that.
On the Tip TV after you come back from vacation. I reckon that should be
I'll do that in August.
Subject. Charlie Burton, founder of Easy Trader, thank you very much for that. Let's take a very, very quick break, and then we're going to wrap up with Mr. Ben Harrington, a business journalist and a Beaterville blogger, reviewing the M&A over the week and the weekly roundup on the newspapers. We'll be straight back after the break. Thank you.